The ledger is older than the flag. Empires do not march first. They balance accounts. Long before cannons appear on a horizon, someone, somewhere, prices the wind, mortgages tomorrow, and insures the darkness. The British Empire, for all its sails and silver buttons, rose on paper, ink that turned oceans into corridors and people into revenue streams. You can still hear the scratching of quills if you hold your ear to the maps. Begin with hedgerows and sheep. Tudor enclosures were not only fences, they were statements. Open land became private yield, and wool, greasy, patient, endlessly exportable, flowed to Antwerp, where credit stretched the crown's short reach. When the monarch's purse ran thin, royal patents multiplied. A letter of marque could convert piracy into policy with a wax seal. Privateering became England's first derivative, off-balance sheet violence packaged to generate state revenue without parliamentary consent. Risk shifted to private captains, returns to public coffers and court favorites. The habit stuck. When power learns to rent out its sovereignty by the voyage, it learns to scale without paying full price. A new creature emerged in this climate, the chartered company, a legal fiction taught to act like a sovereign. The Muscovy and Levant companies tested the instrument. The East India Company perfected it. Shares could be bought and sold. Liability was contained. Monopoly rights, granted by the crown, turned distant coasts into exclusive cash flows. Investors did not need to know how pepper tasted. They needed to know what yield tasted like. In coffeehouses fogged by tobacco and rumor, information spread faster than ships. A paper market grew around voyages that had not yet left the Thames. Finance outran geography, and soon geography obeyed finance. War pressed the accelerator. In 1694, amid a costly struggle with France, the Bank of England was born not as a temple of prudence, but as a machine of war. A syndicate of subscribers lent the government a large sum. In return, the bank received privileges that made it the crown's heartbeat. The state's debts became tradable instruments. Annuities were sold, excise taxes pledged, customs hypothecated. With a standing debt came a standing army and navy, bought on credit, serviced by taxes, and rolled over with confidence, that delicate, perishable collateral without which no empire survives. The funded debt turned Britain's fiscal weakness into strategic endurance. France could win victories. Britain could finance them longer. Paper allowed time to thicken into advantage. But paper tempts fever. In 1720, the South Sea Company proposed to convert chunks of the national debt into equity, alchemy that promised to reduce obligations while inflating fortunes. Ministers nodded, courtiers whispered, Parliament dabbled. Shares leapt skyward on vapor. Bubbles by their nature are stories told with numbers. This one told a story of imperial trade yet to be opened, of profits already counting themselves. When the music stopped, fortunes vanished, reputations collapsed, and small investors were wrecked in a single season. Yet the architecture endured. Even a failed scheme can teach the state to love liquidity. And the crash did not destroy the funded system any more than a storm destroys the idea of a ship. The lesson was not moral, it was technical. Public obligations could be packaged, repriced, and crucially protected when the stakes were large enough. Meanwhile, far to the east, the balance sheet grew teeth. In 1757 at Plassey, a handful of company troops and Indian allies toppled Bengal's ruler, unlocking a treasury rather than a mere territory. 8 years later, the Diwani granted the company the right to collect revenue over millions of lives. An empire of collectors, accountants, and guards took shape. Home charges, the administrative costs, dividends, and interest payable in London converted Bengal's grain into British cash flow. The numbers were precise even when the suffering was not. In 1770, famine devoured Bengal. Millions died. Revenue demands dipped, but dividends did not. Markets can be efficient and indifferent at once. The ledger smiled, even as the fields burned. Across the Atlantic and through the Caribbean, another engine thundered. Sugar plantations, labor camps engineered for maximum extraction, turned cane into crystalline wealth and human beings into collateral. Enslaved bodies were financed, insured, depreciated, and replaced. The triangle of trade, manufactures to Africa, captives to the Americas, sugar to Europe, was not a romantic course traced by tall ships. It was a circuit of credit. Lloyd's Coffeehouse matured into Lloyd's of London, where marine insurance spread risk across ledgers so that storms, mutinies, and rebellions could be priced. Bankers in Liverpool and London discounted bills drawn on planters, who could not escape their debts even when they died. A plantation was not a field. It was a bond with cane growing on top of it. Interest compounded. So did cruelty. The profits, once washed of salt and blood, bought townhouses and parliamentary seats, endowed charities and seeded banks. Money is best at forgetting where it came from. Even the tea in a London cup carried a hidden deficit. The British taste for it drained silver eastward to China, where the Qing accepted bullion but not British manufactures. To halt the hemorrhage, the East India Company expanded its opium trade from India into Chinese markets, a narcotic ledger dressed as commerce. Smugglers carried chests upriver. Addiction multiplied, balances reversed. When Chinese officials tried to stop the flow, gunboats made the balance sheet sovereign. The opium wars forced open ports, fixed tariffs, and delivered Hong Kong as collateral with a harbor. Debt and drug combined into policy. The company no longer pretended it sold tea and textiles, it sold dependency and the treaty terms that made it legal. Back in London, the city turned into a planetary switchboard. Sterling, anchored to gold, became the tool for clearing global debts. Merchant banks, names outlasting dynasties, handled bills of exchange drawn on distant warehouses, discounted by men who measured trust with their fingertips. Discount houses perfected the art of turning time into money and back again. Invisible earnings, insurance premia, brokerage fees, freight charges, exceeded the value of any single cargo because services travel with all cargoes at once. A Liverpool ship could cross the Atlantic. Its owner's credit could cross the world. The empire discovered that it did not need to own every field if it owned the invoice. With finance came a subtler expansion. The empire beyond maps, the empire that begins when a customs house becomes a bondholder's collateral. In Egypt, loans tied to grand projects like the Suez Canal led to international control over revenues when the borrower faltered. In the Ottoman domains, in Latin America, in Persia, debt commissions appeared with ledgers in hand, adjusting budgets, raising taxes, and setting priorities without elections. British gunboats patrolled the margins of contract enforcement, reminding everyone that spreadsheets too have bayonets. Concessionary treaties carved profits from monopolies. Railways with guaranteed returns, mines with exclusive rights, utilities with fixed tariffs indexed to sterling. The empire learned to manage without annexation. It could rule from a counting house and call it reform. No empire, however, lives outside history. 2 world wars transformed the creditor into a supplicant. Gold flowed to New York. Sterling's proud parodies shattered in 1931. Lines formed in the city where clerks once spoke in whispers. The machinery still hummed, but it was running on borrowed voltage. The Second War finished the arithmetic. Britain won militarily and lost financially. Its reserves drained, its ships sunk, its bonds aged and brittle. The dollar took the throne that gold had sat upon. And then, in 1956, a final demonstration. Suez. Britain and France tried to retake a canal with force, only to discover that true sovereignty had migrated to the credit lines of a superpower. A phone call about dollars outweighed a flotilla. When the Bank of England needed support and Washington declined, the operation ended. Even admirals must study balance sheets. What rose on paper did not vanish on paper. It left behind institutions, habits, and a city adapted to the world's liquidity. The City of London reinvented itself as a Eurodollar bazaar, a tax-efficient maze that could welcome capital fleeing regulation and history alike. Sterling no longer cleared the world, but London still priced it. Lawyers wrote the covenants, bankers placed the bonds, insurers measured the risk, and old coffeehouse tables became marble lobbies. The empire's geography had melted. The empire's technique survived. Invisible earnings resumed their quiet rule, not over colonies, but over compliance costs and loopholes, over havens with reliable judges and a taste for discretion. Look closely, and the method appears in every age. The state's urgent needs, war, infrastructure, prestige, invite private credit in exchange for privileges that harden into structures. Monopolies appear as efficiencies. Concessions become reforms. The human beings at the far end, taxpayers, farmers, sailors, porters, absorb the hedging errors in the weather. When the numbers work, dividends flow. When they don't, standards shift, currencies float, debts are restructured, and history nods as if it were all inevitable. But inevitability is only the camouflage of power. Someone chose enclosures over commons. Someone chose annuities over austerity. Someone chose opium over silver and contracts enforced at the tip of a gunboat. None of this renders the achievements imaginary. The docks were efficient. The ships were fast. The courts were predictable. The accounting was exquisite. A merchant in Bombay could draft a bill payable in Manchester and trust the line of signatures like a chain of lanterns in fog. That trust built railways across India and cables under oceans. It standardized gauges and indexed prices and made the world legible in sterling. But clarity in finance is often the veneer of control. Where the numbers are crispest, the shadows can be darkest, because complexity loves to dress as simplicity when it enters Parliament. We like to think money is neutral. It is not. It is a set of promises maintained by rituals, tax day, coupon day, parade day, and by punishments, foreclosure, confiscation, blockade. The British Empire refined those rituals into an art that looked like law and felt like gravity. People obeyed not because they were told, but because their livelihoods depended on the same exchange rates and harvests and shipping schedules that fed their rulers. When change arrived, it was not purely political. It came disguised as a new interest rate, a new anchor for a currency, a new lender with different conditions. The red on the map was always less important than the black and the blue in the ledgers. If you listen to markets today, you may hear familiar music. Multinational balance sheets that rival states, supply chains insured against storms and strikes, commodities financed with borrowed dollars that strengthen as crises deepen, development loans pledged against ports and minerals and the future taxes of people who never signed the contracts. None of it requires conquest. All of it requires consent by necessity. When the bill falls due, diplomacy is a spreadsheet with a handshake on top. The British did not invent greed, but they standardized it. They did not invent credit, but they licensed it for imperial use. They did not invent collapse either. Their genius was to survive repeated shocks by adjusting the terms under which others lived. That is why the system endured longer than the empire itself. It had taught the world how to think about distance as delay, risk as a fee, and sovereignty as a line item. Its last gift was the blueprint for a global market able to outlive its architects. So the ledger remains. It speaks softly in courts, in satellite offices, in quiet negotiations over reforms that are really distributions. It prefers discreet ports and clean reputations. It funds museums with one hand and seizures with the other. It knows that a nation's anthem can be drowned by the hum of a clearing system at noon. The coins, across centuries, looked the same. The value didn't. It moved from silver to signatures, from signatures to screens, chasing trust, fleeing memory. Some empires end in flames. This one ended in arithmetic. Yet its arithmetic still instructs the world on how power is worn, as credit extended, as liquidity provided, as the confident refusal to panic when others must. The British Empire rose because it turned risk into an export and certainty into an import. It fell when the price of certainty exceeded its means. The lesson is not novel, it is merely expensive. History does not repeat. It reopens accounts. When we refuse the audit, it crushes us all the same.